We're not waiting for opportunity, we create an opportunity. We're not waiting for opportunity, we create an opportunity. What's your net worth? What's your net worth? What is your net worth? This is your check-in, right? We checking in. We looking at our network. We're trying to get to our self-worth. We're trying to get our network and our self-worth to be good, right? We want positive feedback from that, right? So we're going to be talking about, again, another part of the net income statement, which also known as a profit and loss statement, a financial statement that companies use in order to see the worth of their company, right? The value of their company. And we're going to be learning about another part of it called the non-operative part, also known as the non-operating income and non-operating expenses, gain and loss, or also known as other. So we're going to be correlating this profit and loss statement with ourselves, right? Same way a business looks at its worth as a company, as an entity, we're going to be looking at ourselves with this. This is why I'm doing this. This is why I'm bringing these accounts and telling you about these accounts and showing you how you can transition it in your life financially so you can understand, but also personally for self-worth, right? Net worth, self-worth, right? Financial and personal, right? So we've already talked about revenue, cost of goods sold, which revenue minus cost of goods sold gives you your gross profit. We talked about operating expenses, which are incurred by daily activities that the company must do, right? Which takes away from your gross profit, which then you come up with your operating income, right? And now we're going to talk about non-operative income and expenses, also known as gain and loss, also known as other. And all of these are on the financial statement of the profit and loss statement. So, non-operating, right? Basically, it has nothing to do with the daily activities of the company, right? It's not directly tied to the daily activities of the company, like we spoke about before with the operating expenses that are tied into the daily activities of business of the company, right? So, non-operating, right, like I said, also can be known as other, or also can be known as gain and losses. Because the non-operating is non-operating income and non-operating expenses that the company could incur. So the non-operating income would be something like them selling their building. They're not in the business, right? They're a t-shirt business. They're not in the business of selling buildings or real estate, but they purchased a building, for example, for $200,000 a few years ago. They sold it now for $250,000. After all the selling expenses, whatever they have left over is a gain, right? So that would go on as a gain, as a non-operating income. So another thing could be maybe the company is into stocks, has ownership in another company, has bonds, has investments in other places, financial investments in other places that brings them back income. It's not personal, but it's the company, right? And it's not to do with the activities of the company daily, or not to do with the services or the product, right? So this is just another avenue or way that the company is earning income. Okay, expenses. Expenses could be, that's not in the daily activities, right? Could be interest expense. That's the biggest one. So a company takes out a loan, they take out the loan to purchase t-shirts, to purchase machines to create the t-shirts, right? And now they go ahead and they have an agreement with this company, with this bank. I'm going to pay this interest expense. This interest expense has nothing to do with the company, right? Has nothing to do with the company's daily activities. This is just the agreement you agreed extra to pay them, besides the money back that you have to pay them for the loan, right? The liability. This is extra, okay? So this extra expense is considered to be not a part of the daily activity. This is just an extra debt that has nothing to do with daily activities or the service or the products. Also, another expense is they have like miscellaneouses, right? So even corporations think of gain, losses, and miscellaneous and extra expenses. Miscellaneous could be a company could be sued, have a lawsuit that they have to pay out. That's something extra. That has nothing to do with the daily activities, but that could happen, right? So they take a loss on that, right? That's another expense. So the expenses are deemed as losses that they have, right? So when you think about this, now to you personally, as yourself, if a company, right, multi-million dollar, multi-billion dollar company, trillion-dollar company is sitting there and they are also attributing to their net worth, right, your self-worth to the extras, let's call it the extras, right, extra, read all about it, right? You can see it in the financial statement of their profit and loss, the extras that they're doing to make themselves more fruitful as a company, right? And the mistakes that may happen or the things that may happen to them that they're preparing for and they're counting as well, right? So, because when you think of gain and losses, you think of investments, right? Because like I told you, it's called non-operating or other or gain and loss section of the profit and loss statement, right? That goes towards the overall net worth. So if a company is looking what they're doing with their extra money, their extra time, why are you not looking at that? Are you looking at that yourself? What are you doing with your extra money? What are you doing with your extra time? What you doing with that extra energy? Where are you investing that, right? Are you investing that into giving you something back to create more income, more flow of income, more flow of revenue? Or are you investing that that's causing more expense? Because even the expense that they pick, that they have on there, interest expense, is still helping their company. Because I'm taking a loan from a financial institution or whoever to go ahead and purchase my machines to make my shirts, right? So this machine now, I have value in this machine. I'm going to transfer those costs to the price of the shirts to the customer's going to pay, right? I'm not going to kill the customer, but I have to get this back. So we're going to figure out ways how we can give the customer the best and still charge to be able to pay back this loan and the interest. So, but I'm still going to count that extra interest because I have the machine to validate the loan, right? Because the machine equals the amount of the loan, right? So you're like, I have that to validate. They wash. That we'll talk about that in another part of on the financial statements, the balance sheet, right? But the interest expense is the extra, the fee, right? Those are the fees that you got to pay extra for. The fees that don't tie to anything. It's just what you got to pay for the cost of doing business. So they even look at that, right? But they use that expense to say, okay, this is going to grow the company. Lawsuits, miscellaneous, right? Things that can happen. They're thinking about miscellaneouses. You'll see it on the financial statements. It'll say miscellaneous, MISC for miscellaneous. Companies are thinking like this. Why are you not thinking like this? Why are you looking for your network to grow and your self-worth to grow when you're not doing the extras? Y'all remember when I think I was like 19. I was having my first son, right? Because I had my first son when I was like 20. And I was like, all right, I'm going to get out the streets and this and that, whatever, right? And I went ahead and I started working. And I was working all these crazy hours, right? Because I was trying to get everything up, the place up, make sure he was good, or his own room, all this stuff I was trying to get. I was just going hard, right? Still working, but I was hustling hard, like probably like, dang near 60, 70 hours a week, right? Just going in. And I met this guy, I can't remember his name, man. I wish I can, but I remember that it was heavyset black gentleman. And he was cool, man. He was like probably like 30, and I was like, 19, 20. Cool dude, always trying to spit the financial game to me. And I remember him so much. Wish I could remember his name. It'll probably hit me later. But he had the car that LL Cool J had in Waist Deep. The movie LL Cool J did with Omar Epps, right? With him and Omar Epps and Nia Long and whatnot. And that's a killer movie right there, Ways Deep. And the car that he had in there when LL Cool J pulls up and he sees the lady who took his money, the girl, you know, the bass or whatever, she took his money, whatever, and he finds her and the guy, and he puts the thing in her mind and says, who's God, right? And whatever the case is. And that car, just remember that car. Was it a Stratus? I think it was called Stratus, but it was longer back then. It was, when it first came out, it was like, it was sick, right? Everybody was trying to cop it because it just looked so slick. I remember he would always pull up in that. And he was telling me, from then, he was like, yo, look, I'm telling you, if you invest your extra bread right now in the IRA account, he's like, yo, even if you open it with them with the 401k, he's like, yo, open the IRA account. You know what I mean? He was like, if it's Roth or traditional, he's like, open an IRA account. He's like, I'm telling you, you start putting certain money in there now, just put it away. He's, I'm telling you, by the time 10 years, you'll have a few $100,000 or better, and you're going to be even way better later on, and you could retire even earlier and leave out of here earlier. In my head, I'm not paying attention to that. You know, I'm thinking like, yo, man, I'm trying to get all this stuff for the kids. And then after me and my son's mom, like, departed, like, you know, after he was born, he was still telling me, spitting this. I'm like, yeah, but I'm going out. I'm kicking it now. You know what I'm saying? I'm doing this. I'm doing that. I'm like, I'm working. I'm doing my thing. I'm back to hustle. I'm like, I'm good, whatever the case is. I'm just ripping and running, right? And I'm thinking, I'm like, yo, it was like, years later, I'm like, man, yo, this dude was totally right. Because I'm looking at the numbers with everything, right? And I'm looking at investments. I'm looking at retirements. I'm looking at people's investments. I'm looking at people's retirement. Hence the whole self-day, right? Trying to create self-days, right? And I'm looking, I'm like, man, he was totally right. If you start early, if I had started this early, right? If I would have paid attention to that, where jewels he was dropping to me, when I was doing my extra bread and my extra time, I'd have been up out of there earlier. You know what I'm saying? I'd have been so much more comfy. Like we're telling all you guys now, right? To start early. Like I tell my son, he just turned 19. I'm like, yo, look, you got to start that right now. You got to bust the moves now. You got to get that skill set now. You got to put that money away now. You got to invest in other stocks. You got to invest in other things now so you can enjoy forever. You know what I'm saying? Just don't worry about it. It'll be, before you know it, time's going to go by regardless, because time's always going to go by. So what are you doing with it? Because a lot of people are wasting their money on things that they don't see no return, only expenses and losses, right? And it's not even losses like the business is doing, where they're saying like, yo, we took out a loan to create something else, another asset, right? Or we had got sued by someone miscellaneous that, damn, we couldn't help. You're actually doing it yourself and choosing the losses over the gains. Like, you're choosing losses over gains. Like, you're a loser at the end of the day. Like, you call people losers and this and that and suckers. Like, when you choose a loss over a gain, that don't make you a loser. I don't know what to tell you. Like, that's just what it is. Like, you're a loser. You're choosing losses over gains. You feel what I'm saying? So think in your mind, what are you doing with your extra time, with your extra funds, with your extra energy? Because corporations are thinking the same way and taking their times and extra funds they have, and they're investing it, right? And they're also anticipating the miscellaneouses of expenses that could hit them, that they can incur, that they have no idea about. They're anticipating all these things already. Or wouldn't it be on their financial statements year after year if it says lesser number or zero or anything like that? It's still there. Even if it says zero, it's still there. So they can see where they're at and what possibly could happen. You know? So are you preparing yourself for your net worth and your self-worth? You know what I mean? Are you looking at that? So let's check in to what our net worth looking like this week. Let's just look at all of that, you know? Let's check it in. Let's look at it, how our net worth looking right now. You know, where we investing our extras into. You know, not even the daily tasks, but what are you doing the extra? When you got that extra time, are you working out? Are you reading a book that's going to give you more knowledge? Are you investing in other places with your funds? You know what I mean? Are you investing in stocks, crypto, small businesses, a business that you want to start, you know, with your extra time, something that you like to do? Or no, you're like, yo, I'm going to go out and hang out, or I'm going to just look at Netflix. You know what I'm saying? Like, what are you doing with it? What are you doing with it? You want this great world. You want to live in this great abundance, right? You want to just chill. You want to, shine. You want to get your shine on, right? But your shine ain't going to last too long, yo. I'm just telling you, you're going to be like a falling star. That's what's going to happen. You're not going to be the sun. You know what I mean? You ain't going to be one of these cosmic planets out here. You're not going to last too long. You're going to be a falling star. You're going to burn out. you're going to burn out because you haven't placed things in order to keep you carrying regardless. You know, you too focused on the now of fun, of instant gratification compared to, preserving yourself. Preservation, right? Preservation that lasts long beyond you're gone, right? Long beyond when you're gone is going to last. That's what we call it wealth, right? That's what wealth is, lasting long beyond you being here, right? Making it better for the next. How you showing that? With your losses? Because you a loser? I don't know. I'm trying to gain some weight. I'm trying to get it cooking. You feel me? So we're not waiting for opportunity. We create an opportunity. We're not waiting for opportunity. We create an opportunity.